Hi, Rob B here with Rob D, and you are listening to the Property Podcast. Are rental prices out of control? Headlines are telling us a lot, but should we listen? And make sure you are listening, because we've got something very exciting for you, but it's exclusively for podcast listeners.
Welcome to the Property Podcast, where every Thursday morning, property investors come together to be informed and inspired. Today, we're getting a little bit geeky. We're getting into some economics. We're getting into some data, but it's going to help you cut through a lot of the nonsense that you'll see around you. And if you need something to help you calm down after all that, stick around to the end for Hub Extra, where we've got an app that will help you do exactly that.
So, Rob, we're loving news stories, it seems, from the Daily Express, because we've got another one, and another nice, calm headline. Corbyn's garden tax disastrous for property market and will hit families and pensioners. Seems a bit unfair. What's happening?
Hey, Rob, can I voice an unpopular opinion at this point? Are we in a safe place?
Please do. It's our podcast, Rob.
Well, I feel sorry for politicians. I know, that's an outrageous statement, but I do feel sorry for them because whenever anyone tries to do anything, whether you agree with it or not, it just gets branded by the other side in some really horrendous sounding way. And so suddenly you can't talk about the merits of the idea anymore, and it just sounds automatically bad. As far as I can make out here, all they're really doing is updating council tax, revaluing everything and moving it so it's assessed nationally rather than locally. But suddenly it's a garden tax. And when the Conservatives tried to do something about care later in life, whether you agreed with it or not, it's a dementia tax. It just sounds like a terrible thing, and nobody ever bothers to get into the detail to figure out whether it actually is a bad thing or not.
I completely agree, Rob. When you read this news story, if you're not awake, you can think, what's going on? A brand new tax? Hurting us all? Typical Labour. But like you said, it's just a rebrand of council tax, possibly making it a little bit fairer. So we're doubling up on that unpopular opinion, Rob, because I'm defending Labour here as well. I don't think there's anything wrong with that. Although to restore some balance, it's the politicians that are making each other's policies look bad. So actually, we still don't have to like politicians if we don't want to.
All right, so we're back on safe ground again. We don't feel sorry for politicians after all. But should we be feeling sorry for ourselves? Because another story that came out last week around this same thing was that this new rebranded council tax will no longer be paid for by tenants. It'll be paid for by landlords. Now, everyone got into a real tizzy about this, and I can see why, based on what we've been through over the last few years. It seems like there's just constant new attacks chipping away at landlords' ability to actually make any money from their investments. In this case, I'm not convinced this is a big deal, because if you actually read the report that this is taken from, it's not suggesting that this is actually meant to be an attack on landlords. It's just that it's more efficient for it to be paid by the owner rather than the occupant, who might be changing every year. It's meant to be an admin thing. And I think they're kind of assuming that that cost will be passed back in the form of the rent, rather than it being an actual cost falling on the landlord. Now, that's not a mad thing in itself. Property taxes in America are paid for by the owner, not the occupant, and lots of other countries as well. So I have read the full report. There's lots of other stuff in there. There's loads of stuff in there that I disagree with. And I don't think it's a particularly coherent set of ideas. But the bits that have been picked out for people to get in a flap about don't seem like that big a deal to me.
You know what, Rob? I love this section of the podcast because we say it time and time again, but don't just base your opinions on the headlines. Because as we've seen in two cases here, the headlines are very misleading. Even the articles attached to these headlines are misleading, which makes everyone's job a little bit harder. But on the Property Podcast, we will debunk as many of these misleading news stories as we can. It's not just property where this happens. So be on alert. You know, all across our lives, we're being fed information that may not be true or maybe just complete lies. But use this. Question things when you see it in the media, and don't let it influence you, your decisions and your emotions. Oh, right, I've got a message. Sorry about this, Rob. Oh, it's from you. What are you doing? I'm doing a podcast.
This is important. I needed to cut in. I'm just testing something here, because we're launching something new next week, and it's something new and exciting. And you, Rob, get to be a part of this because you listen to the Property Podcast. Anyone who doesn't listen to the Property Podcast does not get to be a part of this. This is our little secret. So we can share it with people who are listening right now, but nobody else gets to be in on our little club. And if you read out the message I just sent you, there's a couple of little hints in there about what this might be.
Yeah, this is going to be really exciting. We're going to announce it properly next week. You may have started to guess what it is, but it's a service just for our podcast listeners. You're not going to see this on the forum. You're not going to see it in the emails or the magazine. It's just for podcast listeners. It's our little club. It's completely free, and you'll find out what it is next week.
So if you look at any news headlines, which you should be doing with caution, as we've already covered today, you'll see that renting is unaffordable and something needs to be done about it. There's even talk about drastic solutions like rent controls being needed because this is such an urgent problem and something has to be done. But is it true? Well, Zoopla, the property portal, brought out a really interesting report recently where they've taken their own rental data, of which they obviously have lots. They've compared it with average wages and they've looked at the period between 2007 and 2018 to see how affordability and rent levels have changed over that time. It's really interesting and the conclusions could be quite surprising. So we're going to get into that in a lot of detail today.
So as Rob said, this is a really interesting report and you can find it in our show notes. But what do the results show? Well, let's look at the raw rents first, just the rental levels themselves. The report shows that average rents fell by 7% from 2007 to 2009. Then they recovered by 2014, so they're back to the same level again. And since 2014, they have grown by 12%. So if you're looking at a very short-term window, then you could create headlines saying rents are getting out of control. But strictly speaking, that 12% rise is from 2007 because it went down, recovered, and now eventually it's gone up. It's taken a long time. Yes, the 12% has happened more recently, but it was falling before then.
Exactly. And that average conceals some interesting regional variations that we'll get to a little bit later on. But you can't tell much from the rent level itself. What really matters is that rent as a proportion of people's earnings. That's what determines what's affordable and what's not. So that's what the meat of this report is really all about. And it's very, very interesting. So back in 2008, all that time ago, rent as a proportion of net earnings was 32.2%. So people were spending just under a third of their wages on their rent. By 2015, it had fallen to 30%. And that makes sense because, as we saw, the actual rent levels fell during that period as well. So it fell from 32.2% to 30% in 2015. And the amazing thing is, it's still there now. It's still 30% today. So even though rents have grown by 12% since 2014, affordability is the same because earnings have grown as well. So actually, renting is more affordable today than it was a decade ago.
But here's the thing, that 30% is key because that's exactly in line with the long-term average. That's where we expect it to be. So where rent is today nationally is about right. It's about bob on. That recent rise has taken us back to the average. But as Rob's already touched on, it gets really interesting when you break this down by region. And with all things property, London seems to be doing its own thing. So London rents returned to their pre-crash peak in 2012. So it took 4 years to recover after falling a bit. That's earlier than the rest of the country. And that was really driven by employment. Now, rents in London peaked at 45% of earnings. That's incredible. That is very high and obviously unaffordable. And that peaked in 2015. But since then, it's been falling. And that's a combination of wages rising and rents not going up to 39%. So it is coming down. And although the data's not out yet, it looks like rents in London are dropping as we speak and wages are improving. So that 39% could come down further.
Yes, the Zoopla paper does mention that housing density in London tends to be higher in that you have young professionals and sharers living together. So you might expect rents to be a higher proportion of one person's wages because actually they're being paid for by multiple people. So having London being a bit higher than the rest of the country may be expected. Don't know about that. But in any case, when they were 45% of earnings in 2015, that was a clear signal that they had to start coming back the other way because it just couldn't be sustained at that level. But not all regions behave the same way, and this might be where some of the confusion in the headlines is coming from because people equate London with Britain. So when you look at it and you try to work out if rental prices are out of control, not only on a national level are they lower than they were a decade ago, in the Northwest, Yorkshire and Humberside, they're significantly more affordable than they were a decade ago. And in London, rents as a proportion of earnings are falling. So surprise, surprise, the data does not back up what the headlines are saying. That's hardly shocking in itself, or it shouldn't be by now if you listen to the property podcast for long enough. But there are some other conclusions that we can take from this, Rob, that I think property investors should be very much reassured by.
Yeah, this is really all interesting, but it's what you take away from it that counts. And this is something that we've talked about on the podcast before. And Rob, I know you're pretty passionate about getting this message out because it's not really talked about in property circles. But rents are linked to earnings. And this is brilliant for investors because rents will grow over time as long as earnings do, or inflation, because inflation is linked to earnings. So, Rob, why is it so important that property investors understand this concept?
There are so many reasons. I think there are two big ones for me. Firstly, it puts to bed a lot of nonsense about the fact that landlords can just pass all these costs on to tenants, which we've seen so many times recently. Most recently, with a tenant fees ban, everyone says, oh, this will just get passed on in higher rents. But that's not how it works. Rents are determined by earnings. If every landlord in the country formed a cartel and they tried to double rents overnight, it wouldn't work because people couldn't afford to pay it. Rents are not set by landlords, they're set by the market, and it's set by earnings. The most important point, though, is that this is fantastic because you've basically got an income stream that's linked to inflation forever. Why is that? That's because earnings tend to rise over time, driven by productivity gains and all manner of other things. That doesn't happen in a nice smooth line every single year. We've seen that just looking at the last 10 years. But zoom out far enough and that's the case. Now, that's brilliant because that means in real terms, your income stream stays the same. It doesn't get eaten away at by inflation. That also drives house prices up because houses as an investment are priced ultimately based on the income stream, although there are lots of other variables in there. But again, look at it over a long enough period of time and you've got an asset value and an income stream that increases in line with inflation. And as we've talked about many times in the past, if you use debt, that debt stays static. So that just makes it even better. Basically, from this very simple statement about rents and earnings, lots of things flow from it. And it tells you so much about why we're so enthusiastic about property as a long-term investment. Not for getting rich overnight, not for doing it without putting any of your own money in, but over the long term, the underlying economics are just working for you.
I appreciate this is not an entry-level subject when it comes to property, but we've done a whole podcast on why property goes up in value. It was episode 310. You can find it in our show notes. It's called The Real Reasons Why Property Goes Up in Value. Highly recommend you go back and listen to that podcast because it pairs up with this one really nicely. So again, looking back at regions, rents are higher in London because wages are higher. So above average regional wage growth, for example, Manchester, means rents have potential for above average growth. So Manchester, an area that we talked about for a few years now, has real potential for future growth if you consider rising wages and the rental levels currently there.
Exactly. And I think all of these are really important points for investors to take into account because it not only gives you faith in the long-term prospects for property, but also it gives you some hints about where to be investing if you want to do better than average. The overall economic and political message that comes out of this, though, seems to be that rents are self-regulating. If rents get too high as a proportion of income, then they'll stagnate or even fall until wages catch up. We saw it happen across the country in 2008, 2009. When the economy crashed, people's wages fell, therefore rents fell as well. We've seen it more recently in London in the last few years where rents got too stretched and so they came back down again. So this data is telling us two things. It's telling us that when rents go too far in one direction or the other, they get pulled back into line. And right now, 30% of net earnings is exactly where they have been on average over the long term. So rents are far from out of control at the moment. Unfortunately, Rob, I don't think we can just send this episode to all the politicians, get them to listen to it, and then get them to drop all talk of rent controls and everything else that's going on, because it's not just the facts that they take into account.
No, so after defending Labour policies earlier in the episode, we're now criticising them, because rent controls, which has been proposed by the Labour Party previously, are a silly idea. The market will move the rents to where they need to be, and if rents get out of control, they'll come back down. Just like any other market. The market itself is the best regulator. But unfortunately, the people behind making these decisions and these proposals don't always fully understand their subject, but sometimes make poor decisions. Although don't expect these headlines to go away because where we are in the cycle right now, we expect rents to go above average. We expect that percentage to rise as we move into the second half of the cycle. So you will see more and more headlines around the subject of rents being out of control. And unfortunately, that'll give people who believe in rent controls more fuel. What they don't understand is when we finally have a correction in the mid-2020s, rents will drop and come back in line of where they need to be again. We know, you know, but unfortunately, the people in charge don't.
So it's that part of the show where we like to celebrate your successes. We love hearing about your success stories. Yeah, we love recording the podcast, but the whole point of putting this information out there is it helps you go off and do something with it. So if you've landed a deal, finished a refurb, or just taken your first step into property, we would love to hear about it. So you can do that in the form of a podcast review. You can do it on the Property Hub forum, or you can do it on social media. You'll find us on Facebook, Twitter, and Instagram at Property Hub UK.
And I love this one. It says, I've started listening to you guys in 2017. I'm 2 years into property and I'm currently buying my 20th personal property. The last 6 months have been crazy busy and I've even set up my own lettings and renovation business. If it wasn't for the great material you put out there and the forum, I would not be where I am today. Well, that's incredible. You are where you are today because of the action you've taken, but we're so happy that you've been able to utilise the tools that we put out there to make stuff happen and deliver results like that. Incredible effort though. Results like that don't happen without an outrageous amount of hard work. So congratulations and well done. So Robert, it's always great to see people taking action. It doesn't matter if you're doing 20 properties in 2 years or you've just got the bravery to do your first. Whatever you do, taking action is what we love to see.
Nearly time to wrap up this episode of the Property Podcast, but we've just got time for Hub Extra, where we give you that little bit more, a resource, a tool, an idea, something to send you off a little bit wiser. And it's backed up by the Hub Extra email that you'll get in your inbox on a Friday morning if you're a Property Hub member, which of course you are. This week, I wanted to share an app that I've been using a lot over the last few weeks. It's a meditation app. We've talked about meditation quite a bit on the podcast before, and we've shared a couple of apps as well. But I think when it comes to meditation, different approaches work for different people, and this is one that's really working for me. It's called Waking Up. It's at wakingup.com. It's by someone called Sam Harris, who you might have heard of. He's a neuroscientist, a philosopher, an author, a podcaster, really interesting guy. And this, much like other apps you might have heard of, like calm.com, it's just a series of guided meditations and lessons. But there's something about his approach that's really working for me, that's really helping me get to grips with meditation in a way that I just hadn't done previously. So if you like the idea of meditation and you've already found something that works for you, then great, stick with it. But if it's an idea that you've always wanted to explore but haven't found a way of making it stick for you, then maybe this is worth looking at. So you'll find a link to that and everything else we talk about today in the show notes.
So today we've really dug deep and we've gone beyond the headlines in our news story and in our main topic. And it's something that we really encourage you to do. And we'll keep exposing misleading headlines so that at least you, as a property investor, can invest rationally moving forward. And talking of moving forward, we have Ask Rob and Rob back on Tuesday and the Property Podcast. And make sure you're there for that because we've got our new exciting Property Podcast only group that we can announce next week. If you think you're getting loads of value from us now, wait until you hear what we've got coming up. But until that exciting event happens, take care. Bye-bye.
Bye-bye.